Hey there, how you doing? Jeff Barnes here today, and I'm going to do something a little bit different and actually make a video post about this next topic because I've just found that being in front of people really helps you to build a little bit of that rapport, and hopefully you guys understand a little bit more about my style and who I am by doing this video post. I also want to let you know I'm really excited. I got my book launched, and I don't know who wears the better, this guy or me. I really do like the fact that I finally do have the book published and out there. So if you really want that, selfdirected.com/book, and you'll be able to get a copy of that for free, and we'll rush it out to you. But what I want to talk to you today about is, as a self-directed investor, somebody that really wants to take control of your money, then you need to understand there are a lot of options out there for investing. And that's really what my book was about, is trying to understand why we have retirement in the first place, retirement plans, how those retirement plans work, but then also how you get the maximum benefit from a retirement plan by using self-directed investing. So here you're going to look at a graph of all the different types of investments that are actually available to you. One of the biggest challenges we've had over the past several decades when it comes to the world of finance and investing is that we have this huge Wall Street marketing machine that really tells you this is what you have to invest in. Anybody who has gone out there on their own and gone to maybe some seminars or conferences, things like that, they've learned there's a whole world out there of investment options that they haven't been given by their financial planner or the Wall Street investment broker. So today we're going to uncover a lot of what these investment options are. You can see here that we have debt, equity, commodities, and miscellaneous as the big overarching topics. And almost every single one of the investments you'll ever find will fit into one of these four categories. Now, I may have missed a few of the subcategories here and there. If I did, please let me know. Let me know in the comments box what else you want to see, and I can look those up and make sure they're actually legitimate investments. But I'm not going to go through every single one of these today. There's a lot of different things that you can take away from this chart, and what I really want you to take away is just that it is possible to actually have a number of different types of investments and investment vehicles in your portfolio at any one time. One of the biggest challenges when you do that is that now you have to keep track of those. You have to make sure that you know where the money is coming from, where it's going to, and staying on top of that, okay? So that gets a little bit tricky, but there are tools out there that can help you with some of that. So let's start off with the debt. Debt is really one of those ways that you can go ahead and invest in something without having an ownership stake in it and being able to get some money back on a return or an annualized basis or a cash flow basis, things like that. A lot of people look at debt as a bad thing, but when you are the lender, then it actually becomes a very good thing. This is how banks make money and how investment brokerage houses make money and life insurance companies make money. They actually create debt instruments. And you can see very top there is securities. So we already know those really bad things, right? The CDOs, the collateralized debt obligations, the CMOs, and the mortgage-backed securities. Those have a really, really bad connotation, bad name around them, especially after the housing bubble crisis and the financial crisis, where people lost literally trillions of dollars. But believe it or not, the Federal Reserve is purchasing mortgage-backed securities in record numbers right now, and that's doing a couple things. One, it's propping up the housing market, but it's also boosting the Dow and the markets and letting us feel like we have this false sense of security because the Federal Reserve is just pumping money out there and buying these mortgage-backed securities. So there's a chance that if those start to default again, we could have another housing collapse, another financial crisis. All right, but let's move on from the doom and gloom. We have loans. Loans are something you can do as an individual. You don't need to have a banker do this for you. You can actually create a promissory note or a debenture, and the best way that businesses do this is through bonds, businesses and municipalities. And when you create a loan, you actually create a note, a promise that somebody is going to pay you back. That's what a promissory note is. This is a great way for you to go out there and be a self-directed investor. You can earn anywhere from 5 to 15 or 20% per year doing something like that because now you have a debt instrument that somebody is paying you back on. There's a lot of ways to go about doing that. And actually, in one of the chapters here in the book, Richard Roop, one of the people that worked with me on this book, talks a lot about private lending and how you can do that from a real estate standpoint. In the next video, we'll go into some more of the equity stuff. I think that the mutual funds and the traditional stuff on the debt side is pretty easy to understand. So maybe in the next one, we'll talk about equity a little bit more. But hopefully this chart gives you a good sense for what is available when it comes to an investment option. All right, so I look forward to talking with you. Please put some comments in the chat box down below. Let me know what your thoughts are, and I look forward to speaking with you soon. Take care.